So NASDAQ have been treating me not so nicely lately. And that's natural because if you look at the previous week, we had a beautiful run. We had a very beautiful run, and it was one-sided. The market was one-sided. And those are the conditions that you want to be trading in. You want to be trading when the market is one-sided, meaning it's either going up or going straight down. If you take a look at this week, it's because with the previous week we've been running up high. It's natural that this week have been splashy. It's been wicking up and down. So it's also natural because those are one of the market cycles. One of the market cycles is we have consolidation, and we have distribution, and we have retracement. And currently we are consolidating. That's a natural thing that the market does when it reaches an important objective, of course. When the market reaches an important draw on liquidity, what it does is, okay, we already hit this motherfucker, so now we're gonna rest a little bit. We are going to take money, generate liquidity from uninformed people who comes into the market during those consolidating times and placing trades. So basically they don't know that, so we're generating liquidity for when the time is right, when that phase ends, and it has to end. No market stays and consolidating forever. So it's also fractal. There's like consolidations that happens in the sub-minute. There's the consolidations that happen in the 15-minute charts and less. So those are short-term consolidation, there's intermediate consolidation, and there's also long-term consolidation. So it's fractal. A consolidation can take a quarter. It can take like 3 months consolidating and then starts running either up or down. And there's also a consolidation that takes years, and then the run after that, it's also going to take years because it's fractal, and you view the market with a lens of seeing what it is for its true nature, for its natural nature. And so that's it. So I'm expecting the next week is also going to be consolidating, because we've already had the NFP week, we already have the CPI week, and now we don't have a lot of important shit that's going on in the next week, but we also have FOMC on Wednesday. So the market is going to manipulate until that time, or it's going to give us like a very short-term runs, and those are a little bit hard to trade because you have to be in the right time. You have to be at the right time to catch those moves, but I prefer to not trade at all during those times. I like when the market is one-sided. It's either going up or going down. Those are the conditions that I like to trade in. So that's what I advise you to do too. Patience. Just like music, you know, the market has a rhythm too. It has a rhythm, and you have to be on time with that rhythm, because if you're not on time, then guess what? You're going to take a loss or losses. So you have to learn how to catch the rhythm, and that takes practice, that takes studying, that takes a lot of time to build that skill, if you will. So this is my first video. This is the first time I'm doing this sort of thing, you know, being a guru, if you will. But hope you like it, hope you enjoy the video. I'm going to do a quick review on what we did previous week, and a little bit of prediction for the next week. We are going to analyze the markets and see, based on that, what we can have the next week. All right, so this is going to be spontaneous as hell. This is going to be just me deciding to pick up the phone, start recording, and do what I know best. Like, that's why I said this is going to be spontaneous. This is going to be raw. Please, this is my first time doing this type of thing, teaching. And we'll start with straight what's obvious. I'll just go through several examples of what I want to talk to you about in this session. If you are wondering what those boxes are, those boxes are actually sessions. As you can see, this yellow box right here is the Asian session, and this kind of pink box is the London session, and this dark purple box is the New York session. I really love this indicator because it helps me differentiate between daily sessions, and also helps you to define and spotting very important liquidity pools like previous day's low and previous day's highs. So I'm gonna drop this indicator in the description for y'all, and it's free to use. So straight to the point, I want to talk about the weekly range. I want to talk about the weekly range and how the weekly range develops, because there are phases into the markets. As you may know or you may not know, the markets are heavily manipulated by institutional entities. So everything that happens in the market is not random, not at all. Everything is staged, structured exactly to provide efficiency to the market makers. The market makers provide efficiency, but it's not a fair game, if you know what I mean. It's not a fair game. Most traders lose. Probably all the traders lose the first time, if you know what I mean. We've all been there. So, but most 90% of the probably 99% of the traders lose money over time, like real money. So what smart money institutional entities do is they manipulate the markets, but they also give a chance for you, the retail trader, to spot the characteristics of structure, price action. It's all in price action. If you want to know what the smart money are doing, it's all in the price action, and I'm gonna try to prove that to you. So we are going to start by separating this week. We'll start separating this week. So this is Friday, Thursday, Wednesday, Tuesday, Monday. All right, we'll do our separation right at the opening, which is, all right, yeah, so market opened here. All right, so this is let me use the demonstration. This is how do I use this? I don't know, never mind. Okay, I'm going to use a arrow marker. This is not a good idea. Anyways, never mind. This is a weekly range. So starting off Monday at 12 p.m. New York time, we'll draw a line right there. This is the weekly open. This is where markets open for the previous week. We are going to talk about something that is the engine behind price. It's what delivers price. It's called power of 3. So basically, what power of 3 is, how the hell can I make this? I came not prepared at all, you know. I told y'all it's gonna be spontaneous, so just have fun while I explain to you this. Let me see. Okay, never mind. So power of 3 is, first of all, we have accumulation. Second thing in the power of 3 is manipulation. And the third thing is, try to guess it, distribution. So we are going to talk about the relation of power 3 and the weekly range development. So I want to ask you a simple question. What did price do at this point when the weekly candle opened? Just look at the chart and tell me what you see. By the way, we're on the 30 minutes time frame. So price did what? It opened. Then first thing it did, it went down on Monday. It went down. The thing is, we are in an intermediate term. No, we are actually in a long-term bullish trend. So price is at all-time highs. NASDAQ is soaring up. SPX also. Dow Jones. So the thing is, the power of 3 is in action right here in this weekly candle open. Price opened. First thing that happened after the weekly open, price came down on the first day of the week, which is Monday. Price came down to do one of 3 things. Manipulation. The direction is upwards. We're going high. If I am smart money, if I am an institutional mastermind who needs your liquidity, the retail, to make money First thing I would do, I would make you think that the market is going down so I can place my orders right where you lose when it goes down to go up, if you know what I mean. So you, the retail, you provide the liquidity for smart money to position themselves in the right time at the right price. As you can see right here, this little consolidation right here, which is perfect consolidation to showcase it to you all. We are moving in a range right here. We are building buy-side liquidity also. If you can see, this is buy-side liquidity. So let me turn this into something more visual, if you will. So what the price was doing here is one of three things. Accumulation. What is accumulation, you would say? Accumulation is basically generating buy-side and sell-side liquidity. It's generating liquidity. It's moving in a range. Uninformed individuals, people who don't know the game, retail traders would come at random times and place trades, and they think price would break out or break down and take profits, you know, and make money, if you know what I mean. So it doesn't work like that. Basically, you're lunch. You're lunch. If I'm smart money, you're my lunch money. Why? You came at the wrong time. Place the trade. Position yourself in a phase which is called accumulation. All right, I'm waiting for that. I want you to do that, because after you do that, I'm gonna make you think that it's going your direction and make you add more positions. That's called what? It's called manipulation. I'm manipulating you. After the phase of manipulation ends, it has to end somewhere. I mean, can't be greedy, all this greedy and have this big belly and shit, you know what I mean? So after manipulation ends, I position myself at the right time, at the right price, and along the way, you, the retail trader, you gotta set stop losses. You have to put your stop losses like right here or right here at this area. So at this black line is buy side liquidity, and right here, what do we have? We have sell side liquidity. So we generated liquidity on both sides, and we've taken liquidity on both sides, starting with buy side right here, and then this is after the accumulation phase. Starting with, this is also called, it's considered accumulation, because the real manipulation happened going down, okay? The real manipulation happened going down. And this is where retail traders got, if you know what I mean. And smart money positioned themselves here, going all up here. And if we start diving deeper with power of 3, we can actually read price to a point where we can predict where it's going and position ourselves in the shadows of where the market makers moves. So if you ask me why price came down to this specific level right here, why it went down right here and not here or even here, I would tell you that there must be a reason. What could it be? This right here is a market maker sell model. What happens in a market maker sell model, I'm going to try to draw it down to you. Let me please get the drawing tools. What is path? Okay, I'm going to try to use this. What happens in a market maker sell model is price generates liquidity. And this is what we call original consolidation. Then after we generate liquidity, price starts to move lower. Power of 3, manipulation. Okay. Price moves lower, but it's not moving randomly lower. It's not moving randomly. There must be something we're going there to. A point of interest. I'll get into it in the next video. I'm going to try to explain to you the elements we are trying to reach. It's called a PD array, which is a premium or discount array, and which is the next topic I'm going to discuss in the next video. But right now, let's just use, for the sake of the example, let's just use, okay, can I end this right here? Not end it, but let me use a box. Let's say price came down here to a point of interest. Okay, let's put it in the middle, center. Okay, let's put it in the center. Price came down to the point of interest. We generate liquidity right here, and we fooled retail traders. They are thinking in their mind right now, we're going down, price is reversing, cool, this is a breakout trade, support, resistance, whatever is that bullshit. This is not what I'm trying to teach you. No, that's like traditional medieval trading, and we're doing advanced shit right here. It's mind blowing actually. So after price comes down here, we reverse. Where's the arrow? I can't find the arrow. Where's the arrow? Where's the arrow? Where's the arrow? I can't find it. Where's the arrow? Okay, I found it. Okay, so going back, market maker, sell model, original consolidation, manipulation, power of 3, of course, and then distribution. No. I need the arrow. I need the arrow, not this. How can I find it? Where's the arrow? I need the arrow. Arrow. Okay, I found the arrow. So, distribution. No, I need a continuous arrow. This is not the arrow that I want. Damn, I didn't came prepared at all. Okay, I think this is the arrow. Is it it? No, it's not it. Damn. Arrow. Path. It's a path. It's not arrow. This is wrong. I'm not gonna cut this out of the video. Okay. So what happens next is distribution, and price starts to do what? Starts to move higher. Of course, we know that. But at the same time, after we generate a liquidity at this, okay, done. I'm done. After we generate a liquidity here in this original consolidation, this is buy side liquidity, and what the market maker sell model do is provides efficiency for the market makers, because when retail traders put sell orders right here, they have to put buy stops all over those swing highs to protect their positions. So those are stop losses right here. Price is generating a pool of stop losses. So when we go higher, we make profits, we make money based on those stop losses, the pool of liquidity, if you will, lunch money. Okay. So this is the market maker sell model, and I want you to look at this right here. I'm going to show it in you, or show it in you. That's something. So this is actually a market maker buy model, which is the same thing I showed you, but in reverse. Oh, wait, I showed you the market maker buy model. Damn, I thought I showed you that. Never mind. Okay, so same thing with the schematic. So this is the original consolidation, this is the manipulation, and this is the distribution. I showed you that there must be why it's not moving? I showed you that there must be a point of interest right here. So let's see if there's a point of interest at this level right here. Using the 1 hour chart, let's see if we can find a PD array. And guess what do we find right here? This is the same move I showed you on but it's on the hourly chart. So guess what? There's a point of interest. Where? I want to see it. Right here. This is what we call a fair value gap. That's a short for buy side inefficiency. I don't know how to write inefficiency. The fuck? So never mind. It's a fair value gap. And it's a busy buy side inefficiency, sell side imbalance. I forgot that, but never mind. It's a point of interest. Okay, it's a PD array. It's a fair value gap. It's a busy. It's a buy side imbalance, sell side inefficiency. Down. I'm rusty. Okay, we're gonna put this to the right, and as you can see, this is the market maker buy model. You can see right here. Same thing with the schematics. Boom. This is the original consolidation. Buy side getting wrecked right there. People who sold their stop losses right here are being executed, and they are crying. So this is also the power of 3 for the weekly expansion. We opened, we went down, fair value gap, point of interest, and then we rallied to the upside throughout the week. This was CPI day, which was a very energetic up move, and this was, I think we didn't have any high impact moves on this day. If we go to the economic calendar, we go 13 August, let's see. Yeah, we didn't have any high impact news. So basically this is your roadmap, the economic calendar, and I use Forex Factory because it's the main the calendar for economic events. If we go try to sync our power of 3 based on the economical calendar, as you can see, this is Monday, right? So this is 11 August. All right, so we'll go to the economic calendar and we'll go to 11 August. And as you can see, this is our week right here. And we are going to filter only the high impact news. Okay, so Monday, August. All right, so Monday. Let's see the power of 3 in development with the correlation to the economical situation, the economical calendar. As you can see, Monday we have President Trump speaks, which is orange. It's not very high impact news. But the thing is, Tuesday we have a very high impact news, which is CPI, and this is a very, very, very destructive day. It's a day, you know what I mean? So this is a scary day for beginners, a lovely day for people like me, and hopefully you in the future. But this is a very energetic day. This is a very important indicator. I think it's the consumer price index for the US economy. So it has a lot of volatility, a lot of things going down that way. So if we go to Monday, President Trump speak, no high impact news day, it would be the perfect day for what? For manipulation if we're going higher, because Tuesday we have CPI. CPI is energetic, I'm telling you. So CPI what? CPI is the distribution day, as you can see right here. CPI day, Tuesday, 12th August, we went straight up like a slingshot, if you know what I mean. So Wednesday, President Trump speak, no high impact news. All right, let's go, let me see. Wednesday, in comparison to the CPI day, we moved about how much? 350 points. And if you compare it to this day right here, we've moved about 174 points. So because we didn't have any high impact news this day. And the day after it, we had PPI, core retail sales, which is on Thursday and Friday. And day of the week plays a huge role. So at early in the beginning of the week, we've reached an objective, which is going higher after we've done our manipulation. We accumulated, we manipulated, and then we distributed. And then basically after that, because we had President Trump meeting Putin, so that was on Friday, so there was a lot of uncertainty in the market, which you can see it right here being manifested with a lot of going up and down. The market right here is indecisive, as you can see. It's moving in the range, in this range right here. If we do this, it's moving in the middle of the range with no obvious direction. And that was because we had the President Trump and Putin meeting. The market everybody was anticipating that, and right now there's a lot of uncertainty of what does that mean to the economy overall, but hopefully there will be signs of peace, because with peace comes production, comes work, and comes a lot of good things that would benefit the economy. And when those things happen, those are very beneficial for us as traders, if you know what I mean. So I think that's enough for a first video. I know I've talked a lot about, it was not structured what I'm trying to say. This video was not structured. I was improvising, but I promise you, the next videos, I'm going to come to you with a structured type of education. I'm going to go in depth with the power of 3, the MMXM models, and PD arrays, matrix, and I'm going to dive deeper, I promise you all. And thank you for watching, and hope you enjoy it. Please subscribe, and okay, that's enough.